Hey everybody, great to be back with you. Mike Fairburn for Swing Trading. Hope you're having a good day in the markets. Folks, anybody enjoying this volatility that we've got with the tariffs on and off and going back and forth? There's a lot of potential opportunities for swing trading out there. We're going to talk about, some of what we talk about swing trades each and every week, but we'll go into that in more detail here in just a moment. I wanted to really kind of unlocking a couple of cool, I would just say price patterns. One you're very familiar with the bull flag, but I've got another one too to look at that can be interesting. They have specific price projections, which is always what's interesting about price patterns is you get projections. Of course, we've talked about different exit areas as well. Want to dive into that with at least a couple of trades as well. We'll definitely review some additional trades that we do have on right now. Would like to welcome you all into our discussion today. We do have Paul, Jay Richardson, Jack, Kevin, and many others. Great to have you folks. Any questions, comments, further in the chat? Joining the chat by my good friend, colleague Cameron May, who I've actually gone fishing with right around Cameron's place. I had a good time over there. Just some memories I have the past with Cam, but great to have Cam here. Always knowledgeable and very helpful in these chats. Folks, let's dive into some disclosures to get the show on the road here. All right, information here is for general information purposes only and should not be considered an individualized recommendation. Now, options carry a high level of risk. They're not simple for all investors. Spread trading must be done in a margin account. Multiple leg option strategies will involve multiple transaction costs. While this webcast discusses technical analysis, other approaches, including fundamental analysis, may assert very different views. Okay, the paper money software application is for educational purposes only. I wanted to note, too, that investing does involve risk, including the loss of principal. Now, a couple of key points, too, at the bottom. Well, past performance is no guarantee of future results. Stop loss orders will not guarantee an execution at or near the activation price. Instead, once activated, they do compete with other incoming market orders. Now, with the stop limit order, you risk missing the market altogether. In a fast-moving market, it may be impossible to execute an order at the stop limit price or better. So you might not have the protection you'd actually initially had sought there. Well, that is it for our disclosures. Let's dive into some markets here and see what we've got. I was just looking at chatting with our production crew too about Costco. It was an interesting little rally up, broke a little bit of a trend line that we've talked about previously. It continued to go higher. That wasn't actually going to be part of our discussion today, but what the heck? It was an interesting move, and it continued to break above. Look at that. The 1,000 mark. Wow. We'll see what happens at Costco with Costco stock. Interesting when you look at Costco, it could actually, with a formation like this, one that we've actually chatted about to a degree previously, and that is this. It could, in fact, yeah, if it were to do that, what pattern? Does that strike anybody as a pattern that just kind of stands out to anybody? We've talked about one before, but does that ring a bell by chance? Great to have those of you just joining us as well in the chat. Welcome here. I'll let you think about that, but it does kind of look, well, I would say, this portion could certainly be a bull flag if, in fact, that does unfold. We don't know if it will, but Ted's got it. A C&H, a cup, and a handle. Ted, we're going to be talking about a H&S in just a bit here. Kind of an invert H&S, but there you go. You guys are nailing it. Awesome. Love that. The price patterns are so fascinating because they are in the direction, many of them are, if we're looking at bullish price patterns, in the direction of the trend. That is somewhat, interesting as you kind of look at that over there. Let's look at the markets, though, real quick, so we can get a glimpse of the markets and see what we've got here and see if the market still does support a bit of a bullish theme that we could look at, because we're either looking generally in this class, trades to the upside, trades to the downside, and a lot of those could be tied into one of the key patterns we're going to focus in on today is the flag pattern. Of course, we've got another one to look at, but some more insight hopefully on the flag pattern today. But is the market kind of conducive in terms of bullishness to flag patterns that are bullish as well? Are we seeing bullishness on the market or bearishness? You got to say that's a high and this could be a possible low. I guess we were saying this could be a possible low last week. We put that in there and it turned out to be there's a lower low. So it did dip a little bit further. But generally speaking, with a new high like that, an all-time high. We're pulling back. We're still kind of holding in a range over here. And all else equal, you'd have to kind of say that's a positive for general market direction, in terms of a bullish type scenario, those sorts of setups. So I do want to focus in on that in just a bit as we go through this. Okay, I'm going to do this and just widen this out a little bit so I can see this a little bit better. Perfect. Okay, I want to make sure I could see all those chats coming through. And I got a little bit busy last week. I apologize for that. I was going through the chats, really relied on Cameron quite a bit for the chats. Did a great job. But absolutely. Okay, let's see. Ted says SPX has a newer flag pattern, possibly. Yeah, I mean, there could be. Yeah, I mean, you see these little spikes to the upside and pullbacks. And you could say, collectively on a big scale, could this be also, we've looked at the longer term scales. We've tried to train our eyes in this class a little bit by using the weekly charts to help us get a better sense of also the possibility of a weekly pattern, which just takes more time. There's just more time to do, to unfold, to actually have a bold pattern, I should say a bullish flag pattern on a weekly basis unfold. Going to a weekly chart can really help with that. You kind of have to zoom in a little bit, but you can see over here, maybe, other time frames that might make sense. Yeah, that's actually the NDX there, but yeah, I think you mentioned the SPX. Hello to you, Will, and others just joining us. Robert, we got Robert, Kevin, Paul, Faye, AC Speak, many others. Debbie, how's it going? Good to have you guys on board. Now, let's continue on, shall we? Now, first of all, we want to look at last week's trades. This was our trade that we did on Kroger. Remember, this was kind of a bullish flag scenario setup. We've gone ahead and just we're doing okay on this, just up, with the 100 shares up about, well, paper money wise, it's basically up about a little over 3 points, 3.5 points or so, as we've broken higher here and continuing on up with Kroger in terms of a position that we put on last week. Now, with this trade, a couple things. We did highlight this trend line break, and we did highlight also that there was maybe some indications of some support that seemed to extend back kind of far. And in fact, this went back into last year. We're back into October over here. And then as we began to run higher, we saw with this break, we were looking at it as kind of a strong, sharp follow through when we did take the trade on. And we're just kind of still sitting with this. Now, one of the things we kind of briefly alluded to, I want to go into more details on it, but in terms of the price pattern itself, one of the price patterns I should say price projections. This is in sort of a price pattern. We said that there could be sort of a longer term, flag pattern sort of developing over here. We didn't know. It was kind of a big pullback. We'd had a number of pullbacks to the same point, right, through this support level right around 58. It certainly looked bull flag-ish. We were getting the trend line break with a sharp follow through. Certainly the close above the high of the low day. Volume in terms of the money flow was doing pretty well, and so too was actually the RSI started to really spike up. As you can see down here, I'm just pointing to it right here. We saw some good follow through, and a lot of times traders will say, hey, if you get above a 50 RSI, is what they'll say, that's oftentimes more bullish. So just saying it's right between these two marks here, about a 50. They'll say more bullish up or bearish below. I think that could be an interesting point when prices are breaking a trend line. You're getting a follow-through day. Do they also simultaneously break above the 50-period moving average? There was a brief discussion on that, but just to kind of highlight maybe some of the strength that we saw behind the scenes to kind of maybe lift this price on up. A couple of targets on a trade like this. Now, we looked at this sideways move. Now, we said, I just put in the support here, but we said, if prices come up to this prior high, if this were like, let's say, for example, a longer term bull flag, and this is kind of the rally up consolidation, the possibility of a longer term flag, but that would have been, right, T1. You guys are getting familiar with this, but that's like a T1 target just to the prior pull. Is what we're focused in on here. Now, there could be more. I'm still just holding on to this position right now. It could break a little bit higher. If I were drawing, let me just do this. Let's go back to a tool. We'll pull this down to make our next projected move higher. If, in fact, it was a longer flag that we were looking at, and it's kind of showing strength, like it might really consolidate and break out higher. I think some traders could put even a higher level move in here, but I mean, that's from low to high. I mean, they could be looking even at a bottom down here, actually. Okay, like a move like this to this, right? That could be like the length of the pole. Sometimes it's after a consolidation, they're just looking for the next low and a move up. So there could be a couple of different projections there. Let me use this one initially. This price off of this bottom, I'm measuring it from here, and I'm pulling it up to this point, okay? And then what we do is we take that and we measure it. I'm just going to copy it, just using some straight lines here. I'm going to put it right where our lows were, right there. You see that off the bottom, or darn close to that bottom? That could be construed as a T2. I was going to kind of hold this unless we got stopped. That's our target 2. Real close. You'd have to say between that 66, 68, so right in that 67 type range in there. Okay. Now, if we had a longer projection, it's just going to be that much bigger. Okay. If I were to draw this line off of the whole top and I draw it down to about here, approximately, somewhere in here, then this would be the price projection to the upside. You can just see the length of that pole. It's going to take us, a little bit higher, isn't it? That would be a more aggressive sort of a target. But sometimes when we have these weekly patterns, we might be using the bottom, we might be using the next clear level of a range up top, because after we broke above here, we kind of went flat for a little bit. That was sort of established as a low level. So both of these could be used. Again, T2, more conservative, might be around that 67. Okay, but we did make it above the T1 level here. Okay, so there's always a couple in mind that we've got a couple of targets. Let me just draw those out again so we're all on the same page. Just clear this off. It's so easy and nice to do. But if we have a price pattern here, let's say it's a flag pattern, the first possible target would be the prior high. Right, we talked about that. But then the next target range is this movement in price here of the pole itself, and then we measure that off of the low here. And we know we only really know it's a low when prices start moving up and they ultimately break higher. But then we have this same projected move up here where this price, it's kind of like this price is equal to this price over here in time. And that would be like so T1, that's our one target, target 1, and that is target 2. Okay. Right now we're just looking at a target 2. Okay, so I'm going to put my chart back on here. We've got that in place. Now, as we look at this, we want to zoom in and we want to think about some potential exits. A few of those exits that we've discussed, some of the key levels or key areas to look at. We do have an exponential 10-period moving average that we focused in on too. We're going to bump this up to a 3 so we can see a little bit easier on the chart there. But you can see that that's going to probably start spiking up very, very quickly. So I wouldn't be surprised if tomorrow this moving average here is somewhere up in here, okay? It's an exponential, right, as you can see right there. So it's taking a lot of the more recent data, the last 5 days of the 10-period moving average are going to be more influential than the first 10 days. And what's happened to the last 5 days? Well, these last 3 here have been really quite fast moving. Look at the size of the bar. Big bar, huge, pretty big. And another one here as well. I would anticipate this line really shooting up high. That's a little bit more of, you could say, a little bit more liberal type of a movie potential exit level. In other words, if prices were to break below that 10 period, well, that could be construed as an exit. We talked about using a little bit more loose exit when we're looking at a T2. Because prices have already done what? They've taken out a resistance level. We're already quite profitable on our original position, which was somewhere around in here, maybe a little bit higher. Okay, and so we're dealing with some of these unrealized gains over here already. And maybe if we were waiting for a T2 target, like we said, coming up here at this yellow line around 67 or so, we might give it a little bit more a longer leash, so to speak, to move around. That was one that we'd really focused in on. Now, the other one that we said was really quite tight that we'd used previously, and that is over here. We said the previous day's low. If we trade below the previous day's low, that too could be construed as an exit level. So, for example, we're up here, we move up here again, and then, this becomes a new low, but then the next bar, we trade, it breaks lower, we trade below the prior day low, and you just need to keep looking at that day to day to day. Well, that could be construed as an exit level, right? That could be an exit, possibly, that we could have in place. So that's a tighter one. It keeps things really quite close. And let's just compare that real quick while we're at it. Okay, this is important, but in terms of if we get a chance to use these sorts of exits, price action can do whatever it wants. But if we were to do that, then our potential exit would be here based on tomorrow's move. If it were to come down and break, let's say break below that level, whereas the exponential moving average would be a little bit higher. So that would capture more of our gains. Now, we know the flip side to that is that it might knock us out of the trade early on a move like this, and we might end up going up higher anyways and getting knocked out of our trade too early or exiting too quickly. That's the trade-off. And so a lot of times with the trade-off, you might be focusing in on, hey, what is that longer-term trend doing? The longer-term trend has actually been quite strong. We just broke above this resistance and we're going higher here. You can see some of the volume and metrics down here starting to spike a little bit. So that's where we're at. We're just kind of sticking with it, but those will be our two possible exits. I'm going to stick with a moving average right now. We'll give it a chance, give it a little bit of a longer leash to see if it can make it up to that 67 range, wherever that target level might in fact be. All right. Michael, can you please add the MACD? Absolutely. Let's do it. In fact, let's just do a quick swap out with the, yes, the MACD 2 line. Swap out with the moving average right now. Excuse me, the money flow. And I'm going to make this a little bit thicker. I'm just using the standard widths as well, the original widths that we have down here. So there we go. So we'll use a MACD. And with this MACD, oh, I didn't add the 2 line. Sorry, I wanted to just do the 2 line only. I don't really use the histogram much. I think the histogram can be interesting, but I use the MACD 2 line right there. Got all kinds of stuff now. There we go. Just the 2 line, less to look at there. Okay, so we've got the MACD to look at, and this kind of ties into a discussion that I did last Friday with swing trading, where for you guys, I was really thinking about you guys, in that class. Although, the swing trade class does like the coding for ThinkScript. I did piece together a ThinkScript, put it together for a double divergence screen so that you've got double divergence, which does enable you to use different indicators and different time frames for that divergence to occur. You can get that. I'll try to get that pulled up here. Actually, I should have had that up and going, but it just came up right now. So let me just pull it up and let me just think if I get this. I'll show you on the screen where you can find that. So if you just go under, well, it's up top under playlists. You can come down here if you wanted to find that. I'll just click on it right there. And it's just this one right here. Double divergence, enhanced script to quickly spot RSI and MACD dual divergence. So I will go ahead and put this in the chat if you guys want to check that out, but it's right there. It can help to scan for some of those. I actually built the column code as well. So it'll provide you double divergences specifically for those shorter term entries that might go right in line with swing trades. Okay. All right, so that's that on CR. We're just kind of holding with our CR position. Now, I did put a trade on because we talked about it on Amazon. If Amazon did break up, test, and bounce higher, and this is a little bit different, but let's see if you guys can, you can probably just see this pretty quickly over here. This was the original sort of a flag pattern that we'd looked at. Pull back right there. And the first target would be those prior highs. In fact, I still have the line in there. So that's your T1 right there. It hit the T1. We missed this completely. I mean, I didn't, I just got in after it came back and retested. So let's pause for just a second and think about where the T2 could come in at here. It's really, really important that you get this down because the next potential portion of the run of this flag could come after it retests, which is very, very common. When you break out, you might find that the prior high right over here, there may be some additional support. So a lot of times it pauses there, kind of like this. If I were to go over here, clear this off for just a second, you're going to see a move. You get the original flag pattern. Boom, I hit our T1 right there, but then it extends higher, right? And then it comes back down. Has it reached the T2 yet? Well, sometimes, what did we just get here? We got a bit of a confirmation of the trend. We just got a higher high and the possibility of a higher low right here on this little minute flag pattern, which is part of a larger flag pattern. This is what Amazon kind of looks like right now. We broke above here. I took the trade off the bounce, if you guys remember me talking about that, if it did it. It wasn't doing it at the time. I had to wait to see if it would unfold, and it did. So we've got a small entry in there. It's an expensive stock, but we got an entry in nonetheless. So now what we're looking for is a extension up to the, pull it over here, T2. We use this price, and again, we want that price to be equal to, we want price to equal price on the extended moves off of the low down here. So what we would do is we would take, I'm going to try to draw it in blue. We just take the same initial flag right there, right? I'm going to take that range, I'm going to draw it up here. So will that happen or not? We're starting to get a little bit of a bounce off of Amazon, but we're just still sitting on it. We haven't done anything yet. I'm sorry, we're sitting on the position and waiting for prices to kind of go up. Now I'm going to pull this down so you guys can see where that projected price could be. Hopefully that's coming together for you visually. I think many of you have already got it, but this is the second trade that we put in place over here. Consolidation. There you go. I'm just trying to keep these equal. So price equals to price off the bottom. Maybe it's over here somewhere, question mark. I don't have it perfectly lined up yet. The one thing I will say is that there is earnings coming up, and that can really change the dynamic of what could happen. Notice over here before, we actually ran through earnings, but there was a little bit of a dip. Over here, we ran up to earnings, and then, hey, there was a little bit of a dip. Clearly a dip. We saw another dip over here on earnings. So we could say if it doesn't hit our price pattern before earnings, we could try to take the trade off the table. We could take half the trade off the table. I'm just keeping it really like flexible, whatever considerations anybody might have with any trade. Obviously, this is just a sample, sort of an example trade here. But any sort of a trade that might be similar to this, because a lot of companies are having earnings right now, you could always take some off the table in case it went south. You're trying to take some profits off. You're trying to make some of those unrealized gains, realized gains, as it's kind of ticking higher. But that's our second trade on Amazon right there. Amazon was interesting too because it did have, we went into some detail on this a little while back. I messed up with my y-axis. Anytime you adjust the y-axis, to get that to set back up to normal, just go up to the right-hand corner, hit auto, and look at that. We're right back to where we were, just got to zoom out. If you guys recall, we talked about fractals. You remember that? The fractal discussion is this low lower than the prior two lows. In other words, the other two lows you got on this side, these two lows were lower. This one was lower. It's a fractal. It has a fractal by definition that we discussed. It's actually a retest. That's kind of the key point. It's a retest. I'll say fractal check. It is a bull flag breakout, just BF for short. Bull flag retest over here. And then also, last but not least, what are we doing right there? Look at our moving average there. We've talked about the tendency of that short-term, simple moving average, 10-day or exponential moving average. You came right down to it. We bounced off it a couple of times, and here we are moving. I mean, will we continue to move? That's the question. Okay. Pretty good on that? We clear? Let's see. Marek says, can the bull flag pattern be traded at any stock price level? Or does the stock price need to be more than, okay, so great point. And we talked about this in some of our earlier conversations, and that's this. When is it bull and when is it bear? The trend can really help us with that. And by the way, your moving averages can be a guide to that as well, especially the 30-day, the longer term. But all of the ones that we're looking at here, you'll notice is that the trend is already making higher highs and higher lows. In your eyes, if you haven't seen that yet, you certainly adjust to it. One way to look at this is, is the left side of the screen lower and the right side of the screen higher? In its most basic sense, that kind of defines the upward trend, right? It's hard to miss that. That one we just got to say, yeah, that's true. It's making higher highs and higher lows. So in other words, if you are making lower lows and lower highs, this does right there, this portion right there, and this pullback right there looks like a bull flag. But what is the direction of the trend there? Distinctly, right? Lower lows, boom, boom, lower highs. It's not a bull flag. That'd be more of a bear flag. In other words, if we're using the trend, we're anticipating that it would continue to dip down. Now, it doesn't have to, and sometimes trends change, and we talked about trend line breaks that kind of help us decide that. But the longer, sometimes you get a trend line break off the bottom, even though it's just barely starting. I've got one of those today, actually, to take a look at. All right. Now, we did actually a trade on Costco as well, but I'll talk about that a little bit more next week. We need some additional disclosures to discuss that in more detail because we were looking at options. But just to let you know, that Costco trade is unfolding. We saw that from our very first trade as well. So we actually have three that we're looking at right now, and they're still just kind of steady as she goes. They're unfolding in the direction of the trend. I don't know if you were looking down below, but many of these did have divergences as well. And so we don't want to forget that important point that we learned that can provide us some indication. Like I talked about in the ThinkScript class, if you guys do decide to get that code, you can take a look at it. It can help to scan for things if you want. But in anticipation that prices based upon strength of certain indicators, it might help to facilitate higher price levels or a continuation of the trend higher, whether it be a bull flag or not. Okay, well, we've hit that pretty well. I've got to continue on because we've got some new trades we've got to put on here. But let's start off with a few of these and look at some of these. Now, just as we look at some, I'm going to take off we'll keep it on. We'll keep the moving averages on. If it gets in the way, we'll have to take it out. I really want you guys to focus in on price action and the indicators down below as well. But look at Alphabet over here. Look at the price move up. Do you see the flag pattern here? Sideways, sideways, sideways. Oh, we broke out. Well, check this out. We just barely retested it right there. Just barely. Now we've got one issue, and it's just kind of like one of those issues. We got earnings. We don't know what to expect around earnings. Earnings could be big. Earnings could be big on either side, I should say big. They could be big. So it could jump higher, it could dip. Sometimes traders that are doing this might be using some vertical spread trades. Like I said, we'll probably get into those a little bit more next week on even on higher price stocks. It's interesting. But what happens here? We're right around this kind of the double century mark, right? That's 200. 200 is a big number. Do we come down here? Do we hold off this level? Do we retest it again? Do we bounce? Kind of like an Amazon did that a little bit. That's a very, very strong move here. It's very, very sharp. I will say this, that we're getting negative divergence as it relates to the RSI. Look at the high. We're not anywhere near this high. Look at the MACD. We're not anywhere near there. Tie that into earnings, and there could be some reasons to maybe wait. Now, some traders would say, you know what, Mike, I don't feel that way at all with whatever stock we're looking at. They could say, I'm really confident in this company. I think the number is going to blow everybody away. And, people just haven't been getting in. They don't know what's going to happen. I mean, obviously, more information, the better, right? So there can be different decisions that can be made over here, but that's a question mark. I'm curious about this. Prices haven't been moving as much in terms of some of the indicators we're seeing, and we are above there ahead of earnings. So we're just going to wait and see after earnings what does happen. Like next week, I've shown you it might be an interesting time to do a spread trade because a lot of times those implied volatilities are actually quite high at that point in time, and you're getting more bang for the buck, so to speak. The premiums are higher, and that could be a good thing if you were, let's say, depending upon what kind of trade you were doing there. Okay, so that's what I wanted to point out to you, just to keep an eye on, because, yeah, it's just right there. By the way, Gemini 2 just recently came out, too. That's their second iteration of Gemini for their AI. So, a few things going on. I don't know what that's going to do to earnings over here, what's going to happen, but there you go. Now, getting into our actual trades over here, SYK, which is Stryker Corp. Okay, now price is holding. We're past earnings on this, so we got past it. Not a lot of companies have passed earnings. We're getting more and more each day, but a lot of them are just ahead of earnings. We got earnings right there. Okay, do you see the possibility of the flag pattern unfolding right here? And also importantly, where do we see that exponential moving average at as well? Right at price. Sometimes prices will move and they start to get going right as you're bouncing off of that EMA or SMA, whatever it might be. This is one we've looked at previously, for potential upward moves. We don't know what we'll get here, but we're getting close. We do not have a close above the high of the low day yet, but notice we're consolidating at this interesting area right there. I did want to put a trade on today, but I would actually say that I think based upon what we teach, oh shoot, of course that's going to do that. Okay, I got to zoom in again. So prior highs right there. We broke above the highs. We're resting on it, and it seems to be holding nicely at those levels, right at that EMA. Notice the bull flag right there. After earnings, let's see, what did they do on earnings, by the way? We didn't pull back much. There was a lot of volatility in the market, so I can understand a pullback there. Oh, you got to click and then point. Okay, so we beat estimates by about what? 14 cents or so? Okay, we beat estimates. And holding that range is quite a positive. Now, one thing that we talked about previously with one of our classes, we talked about some of the indicators that can lead price action. One of those is just volume. Remember what we said about the volume? We said, hey, what you want to see is volume generally creeping up when prices are going higher. But remember what we said about when prices are consolidating on the bull flag? Sorry, volume. We want prices to consolidate, preferably at a prior resistance level, which could now be, since we're above it, support. We want volume to diminish. We want there to be, generally speaking, less people interested in selling throughout the normal ebbs and flows of the market. That helps to really let that bull flag pattern die off here and gives us this question that maybe prices could start to bounce here and get going. If so, where would our first target be? It's actually fairly close. T1 would be just the prior high. T2, a lot higher. So that whole range, if this is a support level and we bottom from there, going higher. And Stryker recently has had a tendency to make big moves. Will it happen again? That's a question. That's the question. But it sure is a bit of a flag pattern potentially forming here. So we'll see what goes on with Stryker. Now, it's not a cheap stock. That's why I said it'll be fun to kind of use some of these spread trades going forward. But we can always just reduce our size. Everything's just kind of a unit size based upon, how much money you're using. Or these are paper trades. So sometimes just for ease, we might go use a full 100 shares versus 50 as a partial. But I don't actually have the entry maybe just yet. We have not closed above the high of the low bar, this prior low. Okay, but I wanted to put a trade on today to add to it. So let me just do that. So we'll put just 50 shares in. If I can maybe close above here, maybe we can add the additional 50, or we can add 50 if we break out higher here. I mean, there's a lot of different possibilities, but I just want to get a trade under our belt here today. So I'm just going to go ahead and buy it now. Again, it didn't have a close above the high of the low day, but just for the sake of tracking it, Oh, dang, I didn't turn it to 50. Okay, it's 100. Sorry, it's 100, but it's a paper trade. Uh, and there you go. So consolidation, we put a trade on. Now, where could the potential exits be here? Well, how about below the low of the last day or below the low of the range right there? That's 100 shares. So that might be kind of a heavy load. You know what? Let's just take off that 50. Sorry, I did that quickly just to get it under our belt. Well, just go 50 here, and then I'm just going to sell. So sorry for that confusion, but we'll just knock off 50. So we have a total of 50 shares. Okay. So there we go. All right. We're not really getting an indication of signaling. In fact, if you were to draw a trend line across here, we might be getting close to a break, but not quite there. Interesting signs. Indicators seem to be showing some good strength, as well as volume as being one of those indicators. Okay. So we're setting up a low through here. I'm just going to do it for me, but we don't actually officially have like the entry signal. Just getting under our belt. Create an alert. So in case we do go below this level, okay, exit. And that way it can text me or email me if in fact we start to trade below that level. Okay, well that's Stryker. I wanted to show you a few more just to see them on the chart so you guys can see some visuals of some stocks that might also be, you might be interested in paper trading them. Here is, I'm sorry, oh, COR. COR, there you go. Here's another one. Broke highs, kind of resting near those highs. This is Cencora. Don't know too much about these guys, but they do have earnings. Stryker, we passed earnings, sitting right there at those highs. CORLH might be another one that looks somewhat similar too. You guys can kind of get the glimpse of the pullback. Again, you've got earnings here, but yeah, resting near prior highs is kind of a theme of some of these companies. And last but not least, look at this one, CVS. I threw CVS out here. CVS is almost on the verge of a close above the high to low day or a hold. Look at this. It's coming off the bottom. You do have this trend line breakthrough here. We're resting right at the 10 period moving average. But interestingly, the chart's been going down. You know, one thing that makes this unique, though, it does make it unique, is we had this really strong support level right there. I mean, that's a long one. We broke above that support level. I mean, okay, it was support here, but when you break it, we can't call it support anymore. We got to call it the resistance. And it is the resistance until we take it out. And we did. We did. Could this be the sign of a big change in trend? Earnings might have something key to do with it. It really could. Earnings could. This could be just a fun watch list one to see if we do see things flip. I was reading a few articles on this actually, and I think you can actually look over here if you want to check those out. You know, sometimes you just look at the news and say, you know, what's brewing behind the scenes? Is there something fundamentally interesting in here? You got a few different companies that are talking about it, but one of them, you know, does talk about possibility of AI boosting some of the retailers. It's an interesting article, and there's been a few different themes on that. Okay, I have to say this was a double divergence scan that showed up on the double divergence scan, and you get some interesting ones that might be turning off the bottom on that. Look over here with me. You see the break? Boom. Prices did not break highs. But we talked about last week positive divergence. Hope you guys got that down. I didn't mean to go through it too fast, but there were certainly some things to think about. You see over here divergence of the indicators. The indicators are diverging higher relative to price, and that is showing potential for strength. A lot of traders would look at that as a positive because we haven't hit above that level yet, right? That resistance level. But look what we've got. Trend line break, a little consolidation. Again, earnings there. This could be a fun one for us to keep an eye on. In fact, I'm going to do this. Well, I think we should have, if we get this before earnings, I'll just state this. I might add this to our portfolio. If earnings come up, you know, they might, and we start to move up a little bit, I might add to, I might put this on as a position, but I might hold on to, you can always add, you know, proportionately, excuse me, proportionately You can always add a small portion before you're getting the actual earnings announcement too, if in fact you wanted to. Sorry, folks. All right. Now, we talked about one pattern today. We're going to fit in another pattern before we're done and another trade. Second pattern here is the H&S. The head and shoulders. You say, Mike, the head and shoulders is kind of a bearish pattern. Well, that'd be true. In fact, I'm going to take this off here for now just so we can see this a bit better. But if I go to my Qualcomm trade here, let me highlight for you a head and shoulders potential pattern recently that we saw. This is an inverted head and shoulders pattern. It's also referred to as a head and shoulders bottom formation. You get the low, low. Notice that's a lower low. You get a couple of hits over here too. But that would actually be a shoulder, head, and shoulder. Now the projection on this is simply this range here. I'm going to zoom in because it might be easier for sure. Pull this down. Projection on a move like this is simply going to be the high end of the range where you've touched off top here, down to the low, and that's your measured move. So if you can, this is the measured move. So that's the price we're looking for a target on an inverted head and shoulders pattern. We take the same price range and we add it to the upside. I'm just going to kind of eyeball it here. Puts us close actually to this level. I'm going to move this over here and see if we hit it. We actually did hit it. We came right up to that level. So from here to here, I think we hit it just barely, like right there, but we got close over here. Anyways, those lines don't mean anything anymore, but that's the minimum retracement. And sometimes what traders will use is they'll use these swing trade entries for these longer term moves. If they might anticipate like a long-term move for some people that are like mid-term traders or long-term traders, 3 to 6 months or more. The swing trade entry on a head and shoulders bottom is their actual entry point, because a lot of longer term bottoms can form off of a swing trade level. I'm just giving you guys the targets here. From this low to this low, that's your measured move, and you take this and you measure it to the upside, and you got it right there. So that's just the full target range, right? Sometimes to see these two, if you guys flip these around, just put a minus in here, up, a minus Qualcomm, it'll flip the whole chart around. And then come over here and take a look at it. So there's your shoulder. Looks more like a person this way. Shoulder, head, shoulder. Boom. It broke down and hit the target on the downside. Now that's not Qualcomm. That's just the measurement that I've made putting the minus in there. The trade I wanted to put on and look at, we're going to do it real quick here, but is IDXX. Breaking a longer term trend line coming down. Do you see the head and shoulder pattern here? It's right over here. Shoulder, head, shoulder. You get a couple of them again. You get another one here. A little bit deformed on that right-hand side of the shoulder, but then you get the breakout. And this was a positive earnings announcement, folks. So where is the target on this? Where's the target range? Take the high end of the move, and we add that to the breakout level. Let me just redraw that. We take this range and this range, and we add this up, and we're actually already in that level. So it's funny because sometimes it will put it towards a prior high right there. Okay, let's put a trade on though. It's very expensive. I'm going to put this one actually at a 20 share because it's in the 400 range. But we're going to put that on right now, and we can keep an eye on this guy and see if those positive earnings can add to this move. All right, folks. Well, that is what I had today. I didn't mean to wrap that up so quick. Well, we got through it though. We got through it okay. Folks, if you like today's presentation, smash that like button. I really appreciate that. In fact, it does help that YouTube algorithm to create this kind of content coming more frequently for you if you like these kind of swing trades. Also, really easy to do. Bottom right hand corner of the screen. Smash that subscribe button as well. Love to have you on board our Trader Talks channel. All right, you'll see some double divergences occurring on this chart as well, and maybe some projections for a head and shoulders bottom with a price target, all within a swing trade time frame. All right, everybody. Well, with that, thank you, Cam, for your help and the chat. Everybody have a terrific rest of the day. See you next time.